Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. All right, so we had talked about the Bollinger Bands being tight. We had one move Tuesday, big move yesterday, down to the 200-day exponential moving average here and tested again here. So, the 75, 74 area where things, kind of came to a rest yesterday is at, a decent area on the continuation chart. As you get into the hourly, 95 to 3,000 was key resistance. It broke the weekly pivot back on Tuesday, plateaued a little bit in the overnight, but then off the open yesterday, they dropped it a little bit. We opened and they took it down to 74. We've been kind of grinding between, mid 70s and mid 90s throughout the night. Just a great big day to trade, a lot of volatility. So we were short 44 and change for the overnight. We covered that. We got short off the open in the 20 area, and then we just did we did a couple more throughout the day. 2,900 half. We got long 82 half for a move higher. We were short 85. So all told, 65, not quite 70 handles, but that's what vol will do. As we head into the open today, I'm particularly interested in 28.87. That's your hourly mid band. It's our proprietary moving average. It's a volume weighted average price. They took it down to 78, about 750, 755 in the morning. They bounced it back, but they've run into problems at 86 consistently. So you've had a couple looks. You got matching highs at 86. So as we get into the open in about a half an hour, how does 87 want to react? And depending on how that goes, then you're talking about 28.94, then 2900. On the downside, you convert 78, you're going to have to deal with 74. The bears are going to have to put in another good shift and end up turning that 200-day exponential moving average that I showed you on the daily chart into resistance. If they can do that, then they can continue to progress to the downside. We were certainly in sell rallies mode. And at some point with a couple of big days like yesterday, you're going to get a rally. The question is from where. When the rally does come, my best suggestion to all of you is don't fight it. If you can be long, or step aside, but being early short, being stubborn short, these little, bear market rallies, they tend to move and rip and go a heck of a lot farther and a heck of a lot faster than a lot of people think. And just when you think it's never going to go down, that's exactly what it does. It starts to go down. So don't fight the rallies in this type of tape. All right, everybody have a fantastic day. We'll have some more stuff out on social. Come trade with us. There's not much else to say. You should be in. You will definitely like what you find. It's a great group of people, and we'll teach you how to do this stuff the right way. Trade them well. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.